Thank you all for coming, for braving the public and making it here. We appreciate it. Chris and I are going to talk for about 20 minutes here, give you an update on the business, and then take whatever questions you might have. If I have to summarize the last 6 months here at Kin + Carta, it would be significant progress. Despite the current turmoil that I think we're all seeing in the markets and that I hope we all believe is a short-term hurdle, I firmly believe we're well positioned for the future. So let's dig in. I'm going to give you a couple highlights, and I want to give you some context of our new positioning that we just rolled out last month. Before I turn it over to Chris, who will give you some details on the financial results, and then we'll go through an operational update and some updates on our strategic plan. So on the highlights side, net revenue was up 3%. That includes $2 million from our acquisition of Spire. That Spire Digital was the Denver, Colorado-based software engineering firm we purchased in November. If you recall, we've got 3 pillars in the business: innovation, strategy, and communications. Innovation, which is the core of the business, over 60% of our revenue now, is on track, continuing to grow at the pace that we would expect. We did a significant amount of restructuring and strategy last year to create our Kin + Carta Advise business, and that is now returned to growth. So we're happy with that. We'll give you some more details on that. Communications, we'll dig into in a little bit. While it is profitable, it's taking longer to turn around than we had expected, but that's not without significant action that we've made over the last 6 months, and we'll dive into the moves that we've taken to position that for stabilization in H2. Continued positive revenue shift to, I think the theme I want everyone to walk away with today is how the revenue in the business is shifting to innovation, shifting to the U.S., shifting to our strategic sectors, all in line with our strategic plan. And that's what's going to create a more solid foundation for us as we grow moving forward. Operating profit came in a little ahead of plan at $5.4 million. That includes the investments that we dictated last year, and we'll go through the progress on those investments. We launched 3 new global go-to-market brands, so 3 strategic brands going forward that you hear us talk about: Kin + Carta Advise, Kin + Carta Create, and Kin + Carta Connect. That aligns with our strategy, innovation, and communications pillars. That is a significant step towards our moving from a portfolio of businesses, which is where we started about 18 months ago, to an integrated consultancy. So we'll talk more about that. Spire Digital's doing well, both on the trading and an integration standpoint. It's been a great cultural fit. The teams are working extremely well together. We're unlocking that mountain region, and we're helping them get into new clients with the investments that we've made. We'll talk about that. A strategic review is underway for non-strategic parts of the business now that we've done some significant reorganizing of the proposition, and we are on track for fiscal year expectations. We have not seen any significant impact from COVID-19 to date, but we are obviously watching that very carefully and continuing to assess those risks. So that's a little bit of the background of where we are. I want to share some of the new positioning that we put in place in the market last year. So you may have seen we launched an all-new kinandcarta.com. We've updated the visual identity of the business or the brand, and we've also launched our new purpose. And I want to talk to you a little bit about how we came to this purpose, because it's going to ground a lot of our moves going forward. As a little bit of background, I've been in the emerging technology space for over 20 years now, and the technologies that we're working with today, that we're working with here at Kin + Carta today, artificial intelligence, cloud, blockchain, they are incredibly exciting, and they will undoubtedly reshape our world. But to add a bit of pragmatism to that, so did the technologies that we were working with 20 years ago. And if you look at how the world has evolved over the past 20 years, there have been a handful of small breakthroughs, but more importantly, a series of incremental improvements that have led us to this place. And we believe companies, including our own, need to move away from the idea that the only way they'll succeed is by taking a series of moonshots, and instead have a clear vision and a culture of sustainable innovation. So we're not going to pretend we're in the business of changing the world, because we're not, but we are here to create the products, services, and experiences that make it work better. And that's a promise that we're delivering on every day. And here's how we do it. So about a month ago, we launched these 3 new strategic brands into the market. Carta Advise is a digitally native management consultancy. These are the folks that are at the front end of any digital transformation program, helping our clients identify where to play, how to win, where the opportunities are to modify their business, utilizing the power and opportunity that comes with this next generation of technologies. Carta Create is our modern software engineering studio. These are the folks that actually do the heavy lifting in building those products, building those new services, building those experiences, and that is the core of our business. Carta Connect is our data-driven digital marketing agency that works with the CMOs to help them modernize their marketing technology investments and put in the platforms that allow them to ensure they're getting a return on the strategies that they're putting in place and the products and services that they're bringing to market. So Advise is very focused on our CEO buyer, Create is very focused on our CIO or CTO buyer, and Connect is very focused on our CMO buyer. This leaves a series of, a handful of brands in our venture arm. On the Advise side, Insight, Hive, and Pragma. On Create, Spire Digital will integrate into Create before the end of the calendar year. And on the Connect side, we have Edit and Loop. The brands that are in our venture arm are under strategic review to ensure that they will be fit for purpose as our strategy moves forward. We'll talk a bit more about that. And this is how those 3 brands work together. So this is a time-lapse video over the course of 36 hours that's showing actual messages being sent between Advise, Create, and Connect in Europe and in the US. This to me is the proof point that the connective model is working. It's showing how the collaboration across the connective, not just regionally, but across the globe, is happening to enable the transformation for our clients. So with that, I'll turn it over to Chris, and he'll start going through some of the financials with you.
Thank you, Jay. Good morning, everybody. I certainly don't have as cool of a slide as he just showed, as you might imagine, for the financial results, but thank you nonetheless. I'll start with the key financial highlights for the half. Net revenue was up 76 million pounds, which was up 3% including Spire. This was flat on a like-for-like or organic constant currency basis. Recall our Spire Digital acquisition that Jay highlighted earlier was completed in November and is capped at a price of 27 million pounds. The initial payment of $14.8 million US was funded via equity placing, which was substantially oversubscribed. The next payment for the true-up period for calendar 19 will be paid in H2. Our net revenue continues to shift into innovation into the US and strategic sectors, as reflected on the donut slides there and as Jay previously mentioned. But let me give you a quick rundown of the pillars. So innovation does continue to lead the way, which was up 14%, including Spire. And this growth includes several large UK clients projects that were delayed from H1 into H2 as a result of Brexit concerns. Do note that since the UK election was concluded, those clients have since signed and work is now being delivered on that H2 project. You can see innovation is now 60% of net revenue and will continue to power the company. And our US revenue is now 51% of group overall revenue. Looking at strategy responded well to the restructuring, which we started and have previously talked about, and that was up a modest 1%, but returned to growth. And communications was down 15%. Jay alluded to this, of reasons it was down and actions we're taking, but note that pillar remains profitable. And the actions we're taking of restructuring and maneuvering there are to enhance that profitability, in particular, as it stabilizes and improves in H2 as we expect. The net of this chart is just a longer term view and it shows the results of our investments and our focus over time into innovation and into the larger and faster growing U.S. marketplace. Slide 2, I want to take a moment to talk about client longevity and revenue predictability. So the left side of the chart here reflects client spend. This shows our top 30 clients used to make up about half of our revenue when we started our connective strategy in 2018. And those top 30 clients now make up 65% of our net revenue. Moreover, our top 100 clients make up 90% of our overall revenue. The middle chart reflects client longevity and shows 79 of our top 100 clients have been with us 2 years or more. And over half of our top 100 clients have been with us 4 years or more. The chart on the right is about revenue predictability. And this shows 2/3 of our revenue is derived from clients that have been with us 3 years or more. Likewise, as Jay alluded to earlier, and I think is worth contextualizing again, the continued development of delivering cutting-edge technology like artificial intelligence, cloud modernization, machine learning means that clients can evolve with us and have reason to jump from one technology adoption curve to the next. And as we grow deeper with those relationships, they often broaden that within their large enterprise across their teams as well. So that underpins, as you can see, the predictability and stability of our revenue. Turning to the income statement. I've covered the top line already, so I'll comment mostly on profitability. So first, IFRS 16. It did result in a £500,000 favorable impact to operating profit, which was offset by £600,000 of unfavorable impact to interest expense, or a net $100K adverse impact to PBT. Operating margin was 9% and PBT was $5.4 million. And the lower margin was associated with £2 million of the growth investments Jay previously mentioned, and the decline in communications earnings, along with a favorable one-time adjustment in the prior period. The $2 million of growth investments are part of the $3 million annualized growth investments previously disclosed, but it was a bit higher in the first half due to the investment of starting up Kin + Carta Advise. And as the year progresses, that $2 million in the first half will taper off, and we will end the year at approximately $3 million as previously disclosed. Adjusting items are higher due primarily to the Spire acquisition, partially offset by a decrease in DB pension scheme costs, which included the GMP adjustment in the prior year. Earnings per share were 2.75p, and they were lower than last year as a result of lower adjusted earnings, partially offset by Spire net accretive earnings. Note the Spire placing was for 15.3 million shares at 89p, but the calculation for EPS share count considers just the 2 months that we owned Spire. And the net result was and is expected to be net accretive for the year. Turning to cash flow. There's a lot on this chart, so I'm going to try to give you the highlights. Adjusted EBITDA was £10.4 million, net of approximately $1.9 million of favorable IFRS 16 effects. The underlying cash generated from working capital was £1.8 million, and that was driven by $3.3 million of net inflows from improved customer collections, resulting in DSO improvement from 61 days to 55 days over the period. This was partially offset by the impact of an adverse shift in DPO as a result of lower levels of media pass-through sales. Note that with the higher expected growth in the second half, I also expect higher receivables balance at year end, which could be a small drag on cash flow, previously communicated as well. As I mentioned at prelims 6 months ago, we remain focused on improving our cash flow metrics across the firm, and that can be reflected in the DSO metrics I commented on earlier. Taxes and interest payments were £2.5 million. CapEx was $900,000, down from $1.7 million a year ago due to lower IT systems, CapEx, and lower office fit-outs. The results in adjusted free cash flow This all results, I should say, in adjusted free cash flow of 8.7 million pounds. And finally, considering the effects of the Spire acquisition, along with non-operating outflows that include legacy pension, adjusting items, finance lease payments, and dividends, the net cash flow movement in total was 600,000 pounds of net cash outflow. This is slightly different than what you would see on the balance, what you would see in terms of total debt movement in the face of the statements, due simply to the FX timings of cash flow versus balance sheet at a spot rate. Turning to the balance sheet. Again, let me highlight the IFRS 16 effects. And they were approximately 18.5 million pounds of fixed assets and 23 million pounds of finance lease payable. Goodwill and intangibles were higher due to Spire, as was working capital balance due to Spire. The legacy DB pension remains in a surplus at 5.2 million pounds. And net debt of 39.5 million pounds was higher by 1.1 million compared to fiscal year end, and the leverage ratio of 1.8 was slightly higher than the previous year end 1.68, due primarily to the timing of financing cash flows. These financing cash flows are weighted to H1, and they include dividends of 2 million pounds, pension-related cash flows, including our PPF levy in H1, whereas of course operating cash flows are going to be more second half weighted. As a reminder, our bank covenant provides 85 million pounds of capacity and a leverage ratio of up to 2.7 times adjusted EBITDA. However, I do not expect to approach anywhere near that level, as we continue to expect to end the fiscal year between 1.5 and 2 times, inclusive of the Spire earnout still to be paid here in the second half. So I'll conclude with a few thoughts. Look, H1 had some manageable challenges that we talked about, and we met profit expectations, and we've positioned ourselves well for the second half. We've done so with targeted investments, assertive organizational and market-facing challenges, and that's reflected in our results in favorable revenue shifts. In short, we're in better shape than we were a year ago. Our balance sheet is solid, and we're positioned for the second half growth and beyond. Thank you.
Thanks, Chris. A couple operational updates. We touched on some of this, so I'm going to move through this pretty quickly. So strategy was up 1%, which is a positive trend. We're seeing the advised business unlock those larger 7-figure deals for Connect and Create as expected. So advise is meant to be kind of the tip of the spear for those, and we're excited about the progress and pipeline and revenue trends for both advise and insight. Q2 over Q1 are showing momentum, and we're seeing that track into the second half. So we're happy about that. Hive and Pragma are both under strategic review. On the innovation side, Chris mentioned net revenue was up 14%. There was a couple project delays here in the UK, but those have since signed, so it's really more of a revenue shift. The US continued to grow in its double digits, and the pipeline has improved compared to a year ago. So we're anticipating further growth in the second half. Solstice and Tab both retired their brands. They became Kin and Carta Create. Spire will become part of Kin and Carta Create. That leaves us with essentially a global engineering team of 800 women and men across 3 continents. That's a very valuable asset. We're really pleased with how Spire's been trading. We've helped them create over 5 million pounds in new pipeline through the partnership channel that we stood up at the beginning of the year. If you recall, the partnership channel is where we partner with companies like Google and Microsoft and VMware. They bring us into their clients to help them implement their technologies and vice versa. We've also started to move some of Spire's operations and delivery to our Argentina office, which will improve margins even further for them over time. So all in all, very happy with innovation and where it's headed. Communications, as Chris mentioned, net revenue is down 15%. We continue to move focus away from lower projects, lower value projects, to higher value MarTech implementation work. That's why you're seeing that customer view of the customer relationships getting stronger and larger, and the kind of flighty project revenue starting to go away. But that being said, we needed to take further action to turn communications around, and that meant restructuring Amaze Realize to form Kin and Carta Connect. That involved putting in a new managing director, rebuilding that sales function, lowering the cost base by putting in a flexible workforce, and then moving some targeted capabilities to Argentina. So some significant restructuring over the last 6 months to form Connect, and a very similar restructuring happening in the edit business right now. But all of these things put together alongside improved pipelines give us the optimism that we'll see stabilization in the second half. So lots of work done on communications these last 6 months. Just to give you guys some context of maybe some new client stories and wins, we're continuing to expand our blue chip client base and get some very meaningful DX projects, some new projects down here, just to touch on a couple of them to give you a flavor of the business. So you may recall last year RBS engaged us to build a small and medium-sized enterprise mobile solution for their UK base under their NatWest brand. That product was extremely successful, and they've since engaged us to build a similar platform for their global client base, so internationally. So we're seeing that relationship expand, which is great. M&S, who's been a long-term client for us, has engaged us to create a new backbone for their mobile engineering team on the back of IR35. IR35 is a new regulation that limits the use of contractors. That's been created a slight uplift in our business as companies like M&S have had to move away from freelancers and then work with firms like ours to protect themselves from that regulation. Ford is a new client I'll touch on in a second, and very quickly I want to mention our Corteva client, who's been a long-term Create client. You may recall at the last results I talked about the very cool work we're doing with them around predicting crop yields and using artificial intelligence and machine visioning. So we've since brought in Kin and Carta Connect and sold a 7-figure e-commerce deal with Corteva. So it shows the power of the connective as we can take those Create clients and bring in the Connect capability to sell into that CMO office. So happy about that expansion. Ford in particular, this is our 6th year of working with Ford's Smart Mobility team, which is one of the most strategic areas of Ford's business. We started working with them, that division was 30 people. It's now over 30,000 people. So it's critical to the future of their business in the world of mobility. We're just recently engaged on a multi-year program to build their fleet commercial services app. So this is using telematics and machine learning to optimize both the driver experience as well as the fleet manager experience, and doing things like safety checks and route optimization and those sorts of things. This has also unlocked a deal, so that's a UK-based project, but it's unlocked a deal in Detroit for modernization and helping them move some of their capabilities to the cloud. So that's Create UK, unlocking deals for Create US for this long-term global client. Another very interesting project that we've recently engaged with is with a global quick serve restaurant whose name is confidential. But as you know, there's been a huge movement in the quick serve industry to allow ordering through digital channels, things like mobile and kiosks. But as you might have experienced, ordering from a mobile and a kiosk, it's still not easier than just using your voice. And so the question is, can we, has the voice technology out there and the natural language processing technology and AI, has it caught up to a point where people can order off the menu with their voice? So in this case, this quick serve chain brought in Google to ask them that question, and Google in turn, who was one of our partners, brought in us to prove out if this was possible. We in turn proved it was possible, and they've engaged us now to build out a voice ordering system that'll initially roll out through their mobile application and ultimately through all their drive-thrus. globally. So this is a sizable multi-year engagement and shows the power of artificial intelligence and how we're on the leading edge of that, working with companies like Google to bring that to market. So really, really interesting stuff happening there. Very quickly, in terms of strategic priorities, I'll let you read through this, but I want to touch on a couple highlights. So if you remember, at the beginning of this whole journey, we started almost 18 months ago, we said we were going to operate across 5 different strategic priorities: growth, proposition, people, platform, and expansion. Growth was really about standing up that central sales capability, one of which was our partnership function, as I just mentioned, with Google. That new partnership team sold over 3.25 million pounds in the first half, created over 11 million in pipeline, so we're seeing some significant traction from there. The new central sales function delivered over 400 leads, 5 million in signed deals, and 23 million in pipeline. So where these teams are now stood up, they're contributing. This is part of why we're optimistic of the growth in the second half. And finally, one real quick message. When we retiring Solstice, Tab, and Amaze Realize brands is it's a pretty significant move. But now we've got those 3 marketing teams all aligned behind the Kin + Carta brand. That creates a lot of traction. So as just a simple example of that, our LinkedIn followers our Kin + Carta LinkedIn followers moved from 1,500 to 45,000 followers over the course of that brand change in the last 45 days. That creates momentum, and we'll see the results of that momentum over time. On the proposition side, we launched the new kinandcarta.com, and we've created a more fluid end-to-end software engineering focused proposition. So you'll see that proposition continuing to strengthen, and this has unlocked more. It's easier to cross-sell when you have that holistic proposition, the consistent brand, and we're seeing the results of that. As Chris mentioned too, we talked about our 5 key sectors 18 months ago and how important it was to not pretend to be good at everything and really focus on some key areas. And we've seen healthcare, for example, was a very big focus of ours over the last 9 months. That went from 8% of our net revenue to 15% of our net revenue. And the non-strategic sectors decreased from 23% to 17%. So we're seeing that shift. Again, it's all about that revenue shifting in line with our strategy. On the people side, in order to win, we have to create an environment that attracts and retains the best. And one of the ways we're doing that is creating a higher purpose for our people by certifying Kin + Carta as a socially responsible business through an organization called B Labs, which can certify our individual business units as B corporations or socially responsible businesses. So we are on track to certify Advise, Create, and Insight by the end of this fiscal year, with Connect being certified the following year. This is actually very important to our people, and we'll collect more engagement, retention, and attraction metrics over time as this unfolds, but I thought this was an interesting anecdote I wanted to share with you. This is a post that I made on LinkedIn highlighting our ambitions to be a B Corp, and Jennifer Connolly, who's one of our business development folks within Connect, part of the rebuild of that sales function. She is a star. We recruited her away from Cognizant, and one of the main reasons she came here was because of our B Corp ambitions. And her comment was, "This is a key reason for my joining Kin + Carta. Very happy to discuss more if anyone's interested," and post a link to the careers page. So it's just an interesting anecdote of the power of bringing purpose into the organization. And when we talk about creating a world that works better, being a socially responsible business is part of that. On the platform side, we are building a common technology stack and set of shared services, which will ultimately increase operational gearing as we scale. And we are moving forward, putting in systems across the connective, the entire stack from CRM to PSA to HR, and making significant progress there. And then finally, on the expansion front, we successfully completed the acquisition of Spire. We've unlocked that mountain region. We're seeing the benefits that we can bring them as well as they can bring us. That is a proof point from my perspective in our inorganic expansion strategy. We're also seeing our organic investments, which include Connect in the US and Create in Edinburgh, both growing. So this regional expansion strategy of unlocking clients in new regions is on track, and will ultimately be a further driver of our growth. So we are targeting additional acquisitions in both the U.S. and Europe. So in summary, again, the shape of revenue changing with our strategic intent, the launch of Advise, Create, and Connect, creating that one singular powerful muscle behind the brand, strategy and innovation on track, communications looking to stabilize in H2, Spire Digital proving out with its regional expansion strategy, and all of our strategic priorities continuing to move forward. From an outlook perspective, we are optimistic of an improved second half. The start of trading at the second half has been in line with our expectations. That optimism obviously is tempered by everything happening with COVID-19. We have not experienced any significant impacts from COVID-19 to date. We are obviously watching that like a hawk. We've had some significant deals signed even in the last 4 to 5 days, but we're not going to pretend to be immune to some potential impacts on our client side, although us as an organization kind of operate virtually by nature. So we will continue to assess those risks as this continues to unfold. But for the time being, everything is on track.